Perfect. Hey, Lee Wolf here, Game Face Monday. Hope everyone's doing well out there and had a happy Father's Day, all the families out there. And I'm sitting with Richie Bello and boom, Carl Giuffrida of Lumica Capital. And Todd Adwar will be back in a moment from Cross Country Mortgage. Actually, before we kick into gear with the show, we're just going to run a quick video on our from our sponsor, Shop Smart Autos. So we all know it's commonplace in the auto industry that customers will come and then they go. But why? Was it a better price? Did they go with a different make? Is it a sales training issue? Maybe it's a marketing problem. And if you knew why, could you take back a portion of that business? First things first, you need data. And Shop Smart Autos for dealers has your solution, the VIN Retention Report. Our VIN Retention Report can give you the inside scoop on VINs you held onto and the VINs you lost. But that's not all. What if you could know where the customers and your VINs ended up? For example, if Mrs. Smith purchased a vehicle from you 2 years ago and traded that vehicle in a mile away for the same make but a newer model, why didn't she come back to you? Now with that data, you can reach out. You can target her with a service deal that brings her back into your dealership and gives her the stellar experience she's looking for, while potentially flipping her back to your sales floor for a deal she never knew she could get. That's just one way our VIN Retention Report can help. So take 15 minutes with us today, and we'll show you how the power of data can increase your ROI with the Shop Smart Autos for Dealers VIN Retention Report. Set up your appointment today. All right, so we're back live, and no one can say Richie doesn't know how to put people in their seats. One moment they're not there, the next moment, Rich sends a text, and we're back. How you guys doing?
Doing great. Thanks for having us, Rich, Lee. We appreciate it.
Awesome. So we've had Todd and Carl on the show before. Carl, who leans more business funding, Todd more residential. Richie, why do we have these guys back here today?
I'm glad you said that, because the VIN Retention Report, I'm watching dealers bury themselves with inventory. I got the data that I'm about to send out on the next live podcast. The average days are 250 days old. While COVID, they were 35 days. Let's say Carl and Todd come up with a deal for ABC dealer, and they charge them $200,000 to refinance their properties, right? Watch what happens. They free up this inventory at the auction, take their losses, tap in their losses to their real estate, okay? Now they're flipping inventory. What's happening across the street? That guy has fresh inventory that totally is a different price than today, right? Totally different. You have the COVID stuff. He doesn't. He just bought inventory. He's selling the car thousands of dollars less, getting it financed, okay, because the LTV is right, and you're burying yourself. I know a store in my marketplace, okay, that is tanked. The dealer had a conversation with me and told me, Richie, what do I do? Boom, I says, go to the live show and you'll see the solution, okay? What do you own your property? Almost nothing. I said, I can't take that loss on my financial statement, all right? It'll kill all my retained earnings. It'll kill me. I says, right, I have a solution. Even if it costs him $200,000, he's ahead of the game, because the prices of the cars now are ridiculously cheap. By the way, it's a Lexus store that is having big depreciation. 275 days on an average. You know what that means? That this car's there for 600 days. That's what that means. We have all the data of shop floor because we're a feed company. So that is why these two folks are here. That's the first thing why they're here. Dealers across the country are seeing that. I have a YouTube channel of a dealership that has 10 dealerships and went completely out of business 7 months ago. The reason, because he got out of equity. Okay. That's it. Once you get out of equity, you got to free up your inventory. You got to free it up. Even if you lose money to buy the next inventory and make money, it's that fresh piece. So that's what I got to say. Now, Lee, what do you think about that?
Pretty incredible. Pretty incredible. And besides, so Carl, besides an established business and people that have probably a lot of knowledge in knowing about the lending world, I don't really have, I'm no expert in the lending world. So tomorrow, if I went down the road and I got a new business and I wanted to infuse money into it somehow, what type of, for your average listener out there, what type of parameters do you have to look at? Because what runs through my mind is does the business have to be making a certain amount of money for lending to come into play? Does everything have to be put on me? My credit has to be, well established. And if my credit's good enough and I have assets to back it, what type of parameters do you normally look at?
Well, you almost answered your own question, but it's basically if the business is revenue producing, then it leans more so on the business side. But with the startup, obviously, that's not going to be the case. So in that instance, there is money available. There are programs out there for startups, but even having that out there, it still heavily relies on the borrower, on the business owner. What their credit looks like, what their history looks like, what their bio is, what business are they getting into? What's their expertise in that business? What kind of employment are they going to have? What kind of management, so just indications of showing what the success of the business is going to be. It all mitigates the risk of the lending program. So, but, so that I think answers your question. If it's not revenue producing, it's a startup, it relies heavily on the borrower.
Okay. Or both worlds can come together and you got a better shot.
Right. Right. The viability of the business in the marketplace, in addition to the credit profile of the borrower.
Okay. All right. And Todd, all I ever hear about over the last few years are rates. And I know people during COVID personally that were refinancing their homes in like the low twos.
Yes.
But today, and correct me if I'm wrong, but I'm thinking we're falling somewhere in that like 7 to 9 range kind of rates right now.
A little lower, say 6.5 to 7.25. It seems to be that up and down range for the last 6 months or so.
Yeah, and people are pounding their fists, flipping out because, of course, the reality over the last 3 to 5 years is where's my 2%? But
well, you know what people have now that's very interesting. From first quarter, say January 1st of 2020 to end of first quarter, March 31st of 2024, the average residential property is up over 40% in the United States.
right.
So if you get to Florida, they were the highest, 67%.
Right.
And locally, I'm in New York. New York was 43%. So if you have bought or you owned a house, $500,000, it's up 40%. 4 years, it's $700,000. Why is that important? Well, based on what Richie said, is that the owners need access to some cash and not on the business books, but maybe against their homes. So they have 40% more equity plus, and they're not necessarily looking to touch that 2 or 3 or 3.5% mortgage. So we can give them equity loans, 5, 6, 7, $1 million equity loans against their home that they can use for business capital to help them get through whatever crunch that they're experiencing, or in any business.
Yeah.
So that's very interesting. Also, we're seeing that listings are starting to come aboard. So if you're sitting on properties, it might be a good time to dump a property or two and talk to me about that. Well, is it a good time to dump my property, my investment property, what have you, and pick up cash that way? Because you're at the top of the market, all-time top of the market.
Right.
More listings hitting the market and rates, sort of people maybe waiting until November for the election to see how everything shakes out.
Right.
It may be a good time to sell, but
Yeah.
for sure you have more equity. Take advantage of it.
Yeah, absolutely. Yeah, and I remember in the 80s when I was about 10, and I was looking for a home. No, but I remember people complaining about 10, 12%, 14% on homes back then, whatever the market situation was back then. So, and Todd, Rich, I know you wanted to mention Todd's looking at a new podcast himself here, right?
Yes, and there's another opportunity. That was the first opportunity. The other opportunity, they are dealers, and I know this because one of my partners' name is Tom Hearn. He's a broker, all right? There's so many dealers that want to sell the dealership. But when he goes in and does the assessments, they're buried with cars, with everything, okay? So, wait a minute now. We got these two folks here that I consider them brothers only because I have a relationship with Todd for 10 years. Let me tell you what Todd did for me, okay? I wanted to do a nonprofit, okay, with Clickable and Look Smart. We had a building. He put that together for us. It would not be no nonprofit of Richie Bello, okay? No Arizona if it wasn't for Todd. And everybody out there knows how I feel about the vets and what I've done for vets. I've put my heart and my soul in here with Arizona. I'm in Arizona all the time, okay? If it wasn't for this gentleman here, Todd, I would not have the nonprofit because I was not going to put a nonprofit from a garage. I had to have an institute with a building for training, for this, for that. If not, it's not going to work. I would never get anything from the government. I wouldn't even be recognized, okay? If it wasn't for him, I wouldn't do it. Now, and a lot of my vets know that in Arizona, by the way, now he has a solution that's amazing to me. Amazing for a veteran. I'm going to let him talk about it because I don't do mortgages. What I do is sell, right? Anything, cars, whatever. If you're in front of me, get ready to be sold, okay? So Todd, explain that to them.
So there are three new things for veterans that happened. First of all, everybody's heard of this NAR, which means that buyers around the country may possibly have to come to the table and pay their own realtor fees. So we got, and the VA came out recently and said on a temporary basis, they will allow the realtor fees to be paid the same way they always have been, sort of rolled into the mortgage. So that's number one. Veterans no longer have to worry about hearing that they have to cover the realtor fees. Number two, besides the 100%, meaning no money out of pocket, we're giving money. If you find a house, it doesn't have to be pristine. We'll give you money to fix the house as a veteran. So you're putting no money down, and then we're giving you money to fix the house. So your house is yours when you get into that house. So that's number two. And then we have something where there's down payment assistance for veterans. So even though you don't have to put any money down, we're giving you money as a veteran. So take advantage of it. So we'll give you cash towards your purchase, and you could use it towards closing costs if you want. You could use it towards realtor fees if you want. You can use it to lower your payment if you'd like and buy down the rate. There's a myriad of things. So we're really looking to help the veteran to either get in their home, fix their home, or whatever they need to do. If you currently have a veteran and you already own a home and you want to get some money to fix up your home, give us a call. We have VA money, government money sitting there waiting for you to help you fix your home that you may not be qualified for on a regular loan.
Wow, wow. And Carl, and I don't mean to throw you a curveball here, but in your neck of the woods, are there programs available for our veterans?
There's not really any, programs designed like Todd touched on the residential side, but there are incentives that are offered to veterans, whether it be discounted fees, rate buy downs or whatever it may be. There are incentives out there for veterans as well on the commercial side.
Awesome. And sorry, Rich, go ahead.
What I got to say about Carl, when I give him an introduction, when I met him was like 5 years ago. So, it was all about making money, right? I says, Carl, I want to come up with a solution for the dealer audience. Do the right thing by them. So we took a couple of deals and he didn't make a lot and we didn't make a lot. We want to figure out a real solution. The solution is that Carl does the right thing because he wants to repeat business. We're working with this nonprofit that has 45 million in asset, and we've been back and forth with them, and we gave them a really good deal. They're going for it. So we like, and the Carl side, we like to give a great value to that business, where not to take them out like these other banks and this other loans to really hammer them out. We don't like that, because what we're looking at is the same thing as the VIN retention, because business people are clean today, and we all know in a year from now they're buried again. It happens. You always need cash in business all the time. If you're a good business person, your job as a CEO is to get money in, right? Whether it's money from funding, whether it's money in sales, whatever, because it's a machine. You always need money. So what Carl does is great, because he gives them a good deal where they can do it. You're not ripping them off, and they keep coming back, and we making the money, hopefully, on the return. They keep coming back to us, right? That's the benefit of Carl. And me and Carl are partners. We share the same thing. So we're doing the right thing by the business owners so they can stay more in business, right? And that's the whole idea. So when they come to us, we do the right thing by them, not making a lot of money, but we make enough money to keep our lights on. We're humble enough to say that, but they keep coming back to us. So that is a tremendous value that we were able to put. And it took us a couple of years to come up with that solution. And I had to sell him on, Carl, what about the return business, And we have certain processes that we have that it's about that return business. So that's what I got to say about Carl.
All right. And what about this podcast I'm hearing about with Todd?
Oh, this is going to be a great. Have you guys seen Todd lately, man? He's on fire. And this podcast is really going to help the end user make a better decision, right? Everything today is information selling, but it's more than that. It's knowledge selling. And Todd has the knowledge to coach you virtually online. If I would hire Todd, if I would call Todd and say, can I hire you for this? He would charge me a fortune. Okay. So now you have
not you, Richie.
You have a virtual podcast giving you all the information for you, the end user, to make the right decision. That's all it is. So with that being said, Todd, take it away.
Yeah. So I have been in the real estate business for 35 years and have held many positions. So I have experience in whether it's residential, whether it's government lending, whether it's local lending, whether it's first-time home buyer and getting money from first-time home buyer programs and/or jumbo lending, and whether you are showing your income or whether you really need me to be clever to come up with some things. Let me give you a quick example. We had a woman watching our show. She contacted us. She owned multiple properties. She wanted to buy more businesses. Just like I said before, there's a lot of equity in her home. She kept those very low rate mortgages. We gave her $1.7 million on 4 properties in second mortgages.
Wow.
And she's able to use that money to expand her business or buy more properties or buy more inventory, whatever it was that she was looking to do. And guess what? There's no prepayment penalty on it. So when she makes her profit, if she wants to pay it off, absolutely. So the things that they're learning this week, we're going to be talking about reverse mortgages for seniors. And we're going to be talking about buying a home with a reverse mortgage so you can never lose that home and you'll always have cash flow because there's never a payment on your mortgage. People don't look at that and they think it's not a good thing, but the truth is it's a great thing. So we're going to talk about that. And we're going to talk about the following week, how to fix your credit. We're going to show you how to get your 620 credit score to 800 in under 6 months. So we'll talk about that. So that's it.
And name of the show and where do they find you?
So Mortgage Matters, and they find us all over the place on all the social media sites.
Awesome. Great name too, by the way.
That's a great name because really, that's who Todd is. He really wants to show the customer and educate them so they make that decision. And today, you really need to make decisions because the wrong decision, you can really either lose your house or you can do something wrong. And with a person like Todd, they're giving you the education. Whether you do it with him or not, it doesn't matter. It's about him showing you the ropes and the road to protect you, the customer.
Richie, there are really clever mortgages out there. So, for example, if you have a lot of money in the bank but don't have one dime worth of income, they will give you a mortgage very simply based on how much money you have in the bank. And that was never the way it was 10 years ago or 15 years ago. You had to show your tax returns. I don't care that you have $1.5 million in the bank or you happen to be lucky and be in NVIDIA or Facebook or all these stocks that have doubled, tripled, quadrupled in the last 18 months. And you have this cash, but you don't want to touch those stocks. It's so easy if you're speaking to the right person to get what you want and to get money in your pocket.
I have another business partner that I don't want to mention, but Todd helped him first with a few million, then another few million. This guy's always getting jammed up, right? And Todd is always for the last decade, is always bailing him out, right? And why? Because in business, when you have that kind of business, that industry that he's in, you're always jammed up. You have a big staff, you're always jammed up. So no matter how much you make, it's never enough. And if he's got a lifestyle or his other partner has another lifestyle, then that just adds, I mean, you're just putting gasoline, let's light a match, right? And that's the problem in business, that when a bad time comes like COVID or something, they shut you down to get the kickstart going because they automatically, the first thing they do is stop marketing. Oh, Richie, I'm not doing no more marketing with you. So, okay, no problem. It doesn't matter because I laugh because I says, when I'm finished with him, he's going to do 3 times more marketing. Instead of keeping the machine going slowly, cut back your budget. So that's what happens. Guys, listen to Todd, listen to Carl, because they're both one of the guys that I say great financial coaches for real estate. Having just that mindset of real estate, they're good with money. I know their personal life. Todd is Todd and Carl is Carl. Why? Because they're so good with that. Are you going to hire a coach that doesn't have a financial statement? Are you going to hire a coach that can coach you, but he doesn't generate any income? Okay, let me go hire somebody like that. No, when somebody hires moi, here is my personal financial statements, okay? Would you like to start making this instead of making $3,000 a month? Would you like to do that? Here it is. And if you want my business ones, I give it to you. I'd rather give somebody up front everything so they see, wait a minute. How can you coach somebody if you're like, don't have anything? You know what I mean? So that's the whole thing. So the 2 gentlemen here are very successful at their personal life because I know them well, right? And we hang out together. We both went to Costa Rica together. All three of us were in Costa Rica, so I know the whole thing. We've been away a few times. They really know the finance business. A lot of good business people, good CEOs, don't really know that end of it. Like, for example, I don't know that end. My partner, Michael Ohnheit, does. He's a CFO, CFA. He's got all these titles. I have no title. I'm just Richie, right? I don't care. So I have people that do that. But a lot of guys that are like me, they're not really good at that. So these two guys can be coaching you to grow more, right? Grow more in your business because they can show you the ropes. You might miss opportunity not making the right decision when it comes to real estate. So let's talk about that dealer that's buried. They hardly owe any money in that store. They got 450 cars in stock and another location with 300 more used cars. Hello. So he's not really good financially because you wouldn't be making that kind of mistake. A person that's been 20 years in business, if you were sharp, okay? What happened? COVID. He bought the cars, raising the hand at the auction, right? Now, everything, COVID is over. So now supply is not in demand. Customers are in demand. Not a lot of people know how to get customers, okay? Not many know. So what happens is now the market flipped from supply on demand to customers on demand. Good luck. That's hard because you can always get cars. You go to auctions and you get cars and you just step up. But when the thing flips on you like 08 and 09, you got a problem because try to get customers. Try to go to a factory to get customers. You can go to a factory and get cars, but you can't get customers. So that's the issue. The whole thing flipped. The cars start depreciating, no LTV. A customer comes in, lands on this car. I got $2,000 down. The car depreciated $4,000. Now the LTV is over 120. I'm not selling that car unless I get a customer with $6,000. Hello. Now across the street, that guy's turning his inventory. Now that customer with 2,000 drives that car because, guys, it's like the mortgage business. It's LTV. That's how the finance department works. And you show up with 2 G's, you want a Lexus. Guess what? That ain't working. They go to Rockville Center Lexus. They buy their cars every 30 days. They flip and flip and flip, right? Some dealers don't have that ability, right, to flip it. Right. So what happens is they get buried. That customer comes in with 2,000, goes to Rockville Center with 1,500. They give him back 1,000 and that car gets delivered because that car is at 85% LTV and the other dealer has it at 120. It's no deal. Doesn't matter what the credit's like. It's a guideline. It's compliance. 120 LTV, no good. 90 is. So the solution to these deals that's happening across the country, my partner, Tom Hearn, just got off the phone with me before the podcast. Says, Richie, I got this deal that they're so buried. Maybe you can make heads of it. Carl met my partner, Tom Hearn, right, about this store that's totally buried with everything. The only thing he's not buried with is the property. So everybody says, but the closing ratio is too much. That's what they automatically tell me. I says, you know what? I'm glad you said that because that's the automatic reaction. But who really cares about the closing ratio? You being this buried, that's why you're only selling 85 cars a month when you were doing 250. So if you eliminate the closing ratio, blow out your cars at the auction, buy fresh inventory, you'll make up that closing ratio in no time. Within the first 30 days. Remember, the car business makes money not on what they sell, on what they fix. And the more vehicles and operations you have, the more you're going to make. If you're not delivering cars, if you only got 80 cars and you were doing 250, that vehicles in operation drops, nobody comes in service now. You roll a car, if you get a recall, if you get warranty work, there's all kinds of money in fixed ops, more than sales. So they need to liquidate that inventory get a refinance on the property, because while COVID, they were making a lot of money. So what does a good business person do? I'm making money. Let me write down my property because that is my bank, Richie. Okay, that makes sense. Well, now they have equity. Price values went up, and plus traditionally dealers, catering halls, every business that's smart, that has brains, if not, they wouldn't be in business. They write down their property for when bad time comes, because we all know when bad time comes, if you don't have equity in your property, you really got a problem. And you know the only problem you can't overcome, that there's no solution, death. And the other problem is when you have no money and no way to get it. Now you got a real problem.
Right.
So these guys both have this solution. So that's Todd's number. That's been on there a while, and so is Carl's number, okay? These guys can help you. Dealers, I would hate for a dealer to go out of business or sell it to an auto group like the Lithias of the world, like the Auto Nations of the world. They're going to come in and they're going to eat us all up, like the Carbacks of the world. I would hate that to happen, that you need to sell your company because you've been drowned by them. Don't allow that. Don't allow that. It's your business, your family business. This deal's been in business 27 years. Don't allow that. Be sharp enough and realize that corporate America is coming into the space and they're going to just eat your lunch. And that's killing the local economy. And one of the things that I always promote is the local economy.
Awesome. Well, I think the question of the hour is, Richie's got a podcast. I'm on a podcast with Richie. I see Carl smiling. Todd's got a podcast. What's it going to be, Carl? What's your podcast going to be? You're on mute, I think. Yeah.
I'm gonna have to give that some thought. I knew where you were going right away.
Yeah, I saw the smile. Yeah. Well, I've broken bread with you, and it was pretty good. You could do cooking and mortgages.
That's not a bad idea. See, now we might be onto something.
Right? Right?
Yeah. It might be something in the near future.
I know Todd well, what that podcast is going to be. And if you read The Name Matters, and he hasn't told me anything, and we talk a lot. But this is what the thing is. Todd is going to educate the consumer, because if you look at his videos, you see his level of knowledge and his level of educating the consumer so they can make an intelligent decision. Whether he's not doing it, he didn't do the podcast to get leads because he knows that you're not going to get organic like that. But what he did do is he says, you know what? I've been doing this a while now. He's at the same situation I am. I'm 60 years old, okay? I don't care. What I care is helping at this point in my life. I care helping others. Of course, I want to make money, but I like helping others more than making money, because at the end of the day, we're all going to leave and we can't take anything with us. The only thing we can take is what we leave on this planet. That's it. Our knowledge is going to stay. Okay? So that's really why
I was just saying to somebody the other day that the only reason after 35 years that I can continue to do this is because I actually like what I do. So when a first-time home buyer buys a house, it's a big deal for them. When I save somebody $1,000 a month and it changes their lifestyle and it saves their marriage, it's a big deal for them. When I give them a few $100,000 in cash and they either pay for their daughter's wedding or a bar mitzvah, or they buy a couple of investment properties, it's a big deal for them. And you don't see that in many industries. So it's fun to be in my business. And that's part of why I get up in the morning, because I like helping people. Sure, I'm going to make money.
Yeah,
right.
But if I can help people while I'm making some money, it's a big deal for me.
Yeah. Yeah.
And the whole thing is helping others make the right decision, helping others that are having a rough time, because none of us want people to go out. We always want to help others first and then make money. Of course, you're going to make money because there's a value there, right? But when you really go from your heart, from your heart to help others, things for you change. You start getting a different level of energy. You start getting a different type of enthusiasm, and you start feeling good about yourself. It builds your confidence more, so then you can sell and you can earn more. If you do things that you go to sleep and say, oh shit, tomorrow morning I got this problem, that kind of stuff doesn't work, guys. But that kind of energy that Todd has, that kind of energy that Carl has, that kind of energy that Lee has, it's important. That comes from the heart to help others with nothing back, just to educate them and help them, so they make the right decision. So maybe they made the right decision because they saw Todd's podcast and they got a different type of view on it. Well, their family's gonna buy something in the near future. Tells me, you know anybody in the mortgage business? Or you know what? I never did business with this guy, Todd, but because of him, I did this, that. And watch this. 10 years ago, I never did business with Todd, but because of him, I got the institute, and he did more than the right thing by Richie, more than the right thing. So that helped the relationship. And I've given him deals here and there, but that helped. And every customer I've given it to him, he's done the right thing, and they've built a relationship with him. Oh, that tells me something. Not only did I build a relationship with him, others have. So that tells me that there's tremendous amount of value, and that's when he became my friend. Okay, when I saw that value that he possesses, and he's coached me, educated me on that aspect of it. And boy, let me tell you, I've learned a lot, and I've grown a great deal since I met him. And I thank him for that.
Thank you.
Well, I thank both the gentlemen for being here today. Todd
Pleasure.
Adwar of Cross Country Mortgage, Carl Giuffrida of Lumica Capital. Thank you, gentlemen. Rich, as always, thank you for letting me sit next to you now a couple of times a week.
Thank you.
All right. And I hope you guys have a great day.
Thanks,
God bless you all.
Thank you.
Take care, guys.